I'm Peter Gazillionaire. Drop a few zeros. There was a guy from the past called Crazy Eddie who would gesticulate like this. He is insane! I'm actually quite rational, especially when it comes to money. Is it running? It's important to drink your water, especially if you're going to be talking for a long time. So I'm Peter. I have an MBA. I worked as an equity analyst on Wall Street for 3 banks, and I've also worked as a investor relations professional for companies like Electronic Arts and Activision, where I was in charge of explaining those companies' messages to professional investors, hedge fund managers and analysts, mutual fund managers and analysts. And so I think I do understand how Wall Street works and how people make money on it. And I don't think it's by picking stocks, but we'll go on to that a little later. Today we're going to talk about a tweet from Michael Burry, who's a very famous investor, most famous for correctly betting on the housing market crash of 2008. So famous and so successful that a movie, The Big Short, was made about him. He's out there now tweeting on Twitter as Cassandra, which is, very famously someone who gives out warnings and is not heard. He's very appealing because as someone who's talking about risk, it sounds like he's on your side. It sounds like he's trying to help you. Just a helpful guy, right? Well, I'm not sure about that. I don't really think so. As Warren Buffett says, if you've been playing poker for a half hour and you don't know who the patsy is, it's you. Well, if you just sort of wandered into financial markets and you're taking advice from all sorts of people, you may not be aware of what their motives are and what they're really trying to accomplish. I think Burry is famously talking his book. When you're talking your book, it means you're promoting opinions and ideas that support your positions. And that's what he's doing. He's been short. He'd love it if markets melted down a little bit further. And he's got a tweet now which says the bullwhip effect is going to just wreak havoc in the economy. It's going to cause the Fed to go from tightening to back to lowering rates, reverse themselves. That would be a tremendous reversal and quite frightening for a lot of investors who are used to fairly steady Fed policy. Let's talk about the bullwhip effect for a second. It sounds scary. No one wants to be whipped with a bullwhip. In the 1960s, when the supply chain was being studied in business, they created this term, the bullwhip effect. And what it means is that a small change in demand from the buyer as it travels up the supply chain can be magnified. So the example is someone purchases, let's use iPhones, right? Someone purchases an iPhone or doesn't. At some point, Apple adjusts its demand forecast and sends its orders to the supplier, Foxconn in this case. Foxconn then thinks, I need to, if it's an up thing, I'm going to add factories and employees, and if it's down, I'm going to reduce employees and reduce factories. And then the suppliers to Foxconn, machine makers, equipment manufacturers, they all in turn will adjust their forecasts all the way up to material suppliers, employees. So if these forecasts get out of whack, and the way they describe it is it takes time, the demand changes at Apple, a little bit later Foxconn, a little bit later again, their suppliers, a little bit later the employees. These things can be amplified. That sounds scary as each person in the supply chain adjusts their forecast and maybe amplifies that. It could be very dramatic, but it's really not true. The truth is that everyone has very rapid access to information. There's a whole theory of supply chain management pioneered by Toyota, now in use throughout the world, called the Kanban, where you actually manage inventories very, very closely. Everyone cooperates with great information and it's very efficient. And that's been going on for 50 or more years. So the bullwhip effect is actually a very old theory that's kind of irrelevant, but Burry is using it along with a little bit of supporting data, an article from CNN on how the supply chain is in crisis, to really frighten people. And it's true, the supply chain has been disrupted. We shut down the world in 2020 and then flooded the economy with capital, which led to excess demand. So we went from low demand to very high demand, which has resulted in inflation. And now to address inflation, the Federal Reserve is ratcheting up interest rates, which is making consumption more expensive, which should bring down demand and ultimately bring us back to a low inflation, stable environment. And, wish them luck. We all hope it works out. There's, of course, a chance that they could over-tighten and lead to a recession. And if we have a recession, we'll have it and prices will adjust and life will go on. I don't know if there's going to be a recession. There may well be, there may not be. But in the end, I don't care. I don't care because I don't plan to buy or sell in a massive way under any circumstances. I plan to simply stay the course with my investments and expect that over time, businesses will be successful. People will want to consume, businesses will want to produce goods, and will be able to sell them profitably, increasingly so, to more consumers around the world. Is Michael Burry really your friend? Does he really care about your interests? I don't think so. I think Michael Burry cares a lot about Michael Burry's interests, which right now are clearly on the short side. If he can drum up even one more investor to go short, that'll be helpful to him in a small way, and it's worth a tweet for him. So he says in a couple of tweets that, the market could decline another 50%. And hearing this information, what should I do? Oh my God. I'm going to lose half my money in the market. I better sell now. That's really what Burry is telling you. Sell now. It turns out that's very dangerous advice. Sure, it could go down another 50%. I have no idea what the market's going to do next. If I knew, I wouldn't be here talking to you. I'd be rapidly out trading, just like Burry would be. He would be, no one gives away, market moving advice or advice they're highly confident of for free. In fact, if there's something given to you for free, you should be very skeptical. Most free advice is worth what you pay for it, which, is nothing. The other question you should ask yourself when you receive advice about what to do in the market, to buy a stock, to go long, to go short, to get out, the sky is falling, oh no, I better get out, is ask yourself, is this within my circle of competence, to quote Buffett again? Do you really understand this situation? Do you have a full understanding? Frankly, most people don't. No one really knows what's going to happen next. So making decisions to be in or out are very risky. And, there's a great quote, which is, in order to minimize financial mistakes, make fewer financial decisions. The more you trade and churn your account, the lower your returns are likely to be. Again, these can all be attributed to our friend Warren, who's one of the few people out there who actually, I think, offers benevolent, helpful advice. Warren says, buy the S&P 500 and forget about it. And that's really the advice I have for you as well. If you're going to invest, know the game you're playing. And the game you're playing, if you're going to be successful, you can play any game you want. You can go out there and compete with the Michael Burrys of the world, and, I wish you luck in that. But if you want to play the investing game with a high probability of success, you're going to have to be patient. And that means buying and holding and sitting around and doing other things with your life. If you buy stocks, a basket of diversified stocks, the S&P 500, and hold it. Over time, those companies will likely be successful. It's a high probability. At no point in history has there been a 20-year period of negative returns in the stock market. I'll have to check that. I think there might have been one. There are many periods of 1 year of negative returns, 2 years of negative returns. But over longer periods of time, the growth of earnings, the success of the economy, more people buying more stuff, companies getting more efficient at delivering that stuff leads to higher profits and higher earnings and ultimately higher stock prices. So what should you do with Michael Burry's warning that stocks could fall 50%? I think you should ignore it. Burry's not trying to help you. He's got his own agenda. He has a couple tweets out there. They sound really scary. The bullwhip effect sounds scary. There is scary stuff all the time. They say the stock market climbs a wall of worry. And what that means is there's always problems. There have been reasons to sell throughout history. The sky is always falling, but somehow it doesn't. The world is always ending, and yet it hasn't. The stock market is around 3,800 right now. I'll bet you 10 to 1 that the next 3,800 points are up. It is more likely that the stock market will hit 7,600 than it will hit zero. Almost guaranteed. Nothing in life is guaranteed, but throughout history, there have been sell-offs, and every time it's recovered, it's going to recover again. So I think the thing to remember here is know the game you're playing. If you're going to trade the market short term, you're competing against the most highly compensated people in the world. They're good at their game, and you're a beginner. You're just a regular person doing another job, thinking about this, getting a little worried. Take 3 deep breaths. Things are never as bad or as good as they may appear at any given moment. The biggest force in the markets is what's called mean reversion, where if things go up, they're likely to come down again, and if things go down, they're likely to go up again. Keep that in mind, take a deep breath, and think of other things. I plan to provide content on a regular basis designed to be helpful to you, the viewer. I'm not going to promote things I don't believe in. If I'm fortunate enough to be in a position to promote anything. Most people have an agenda. Burry is just another one of those guys with an agenda. My agenda is to be helpful, and through being helpful, I hope to build an audience. If you want to help with that, please like the channel, stick around, and I'll continue to honestly share my insights with you. I hope you enjoy that. I hope it's helpful to you, and I hope you'll comment, like, subscribe, tell your friends, send money, whatever you want to do. Thank you.